Yeah, hi, I'm back, Kaushik Chatterjee. So, in this video, what we are going to discuss, I hope you have seen my couple of last videos, and I hope you are getting a lot of points, lot of discussion already happened, even starting from your investment, lot of tools, what are the parameters, all those things, like step by step we are just discussing, right? So now in this video, what we are going to discuss, it is very important. Even most of the people, they're actually doing this on a regular basis, but they don't know what exactly about all those things. So let me tell you very honestly, it is all about EMI. So what we are going to discuss in this video, it is all about the EMI. EMI. I hope this name, most of the people you know, because there will be more or less people even, they are bound to pay their EMI, like whatever could be the small big amount. Actually, most of the people are aware about this terminology. It is not a new terminology, but what exactly we need to understand, what exactly EMI and how it works actually. So that is most important. So we are going to discuss in this video what exactly EMI, what is the definition of EMI, and how it is going to be uh, affect in our life, right? So welcome once again all of you. And first of all, this EMI word, EMI, there is an abbreviation of this word called equated monthly installment. Equated monthly installment. So the name itself, I hope you are very clear. So it is actually equally divided for your yearly whatever payout you need to do. Now let's say I'm just giving an example. Let's say I need to pay, let's say on a year, let's say around 1,20,000. I'm just giving an example. So let's say if I equally divide per month, how much it will come? It will be 10,000, and that is my EMI, right? So there will be a lot of parameters to calculate. I'm not getting into this video about EMI, so probably that we can discuss even some other videos, because there are a lot of about your loans, about your other things. So based on that one, how EMI will be calculated, so that will definitely will discuss in the other videos. But in this video, what we are going to discuss only about equated monthly installment. So now we understood what exactly, how it will be equally divided for my monthly installment, and that is all about my EMI, right? So let's say it is 10,000. Now the second thing, mostly we don't watch actually. I have a EMI statement, I pay even every month, but I don't know what exactly I am actually paying. I know only 10,000, let's say my commitment, I need to pay about this, but I'm not going to look out like what exactly I'm going to pay out about this EMI. Am I right? Because 99% people, even they don't look at what exactly how this EMI works actually. So let me tell you in this video. So now we understood what exactly equated monthly installment, EMI. It's a very popular word, very popular terminology. But on this 10,000, how it will be calculated? Let me tell you that. So if you have any EMI statement, or currently if you are paying, let's say, any sort of EMI, so you just take out the statement, you will understand. And that statement itself, it is called amortization statement, amortization table, whatever you say, amortization. Now in this table, what you can see, in this statement, what you can see there will be a principal amount, and there will be a interest amount. Now let me come to the definition of EMI now. So EMI is equal P plus I. I'll repeat once again. EMI is equal P plus I. That means the principal, whatever you have already even borrowed, let's say whatever the financial institute, or how you are getting this EMI statement, on that you have to pay the interest. That interest could be like already there could be whatever the interest is already been uh, applied for this capital, so that will be the interest. So EMI is actual, the definition of EMI is, it is principal plus your interest. Now look at your amortization table. In amortization table, what you can see actually, you can see, let's say I have taken down, let's say 1 lakh EMI capital. Let's say in this 1 lakh, what is going to happen? The entire 1 lakh is not going to deduct in one shot, or let's say it is not going to deduct even, let's say, in initial days. If you look out the any kind of your personal loan, or let's say your home loan, or let's say any car loan, whatever, let's say you have taken already, you will see a percentage of capital it is going to be deducted. It will be very less. Interest will be more. Now I'll tell you that logic also. You might be surprised, oh Kaushik, what you are telling, I'm just falling from the sky actually. That's what I told you. If you have any EMI statement, you just go and check it out, take the statement, whatever I'm saying, you can just look at even at this statement and you can understand also. Now the logic behind this, why your capital also it will not be deducted initially high and your interest will be given more. The reason is because, see, the statistics says a banker, whenever they are a financial institute, whenever they are providing or giving any sort of loan, so actually they are actually in danger, because that is their money. What you are paying actually the interest, right? That is the banking policy, that is the financial institute policy. So you are agreed, mutually you are agreed. That's what this EMI started, and whatever the capital you have borrowed, you have agreed with this point. That is the legal part I'm talking. Now the other side, what I'm trying to say, the logically, if you look out the banking side, the concept of this, initially you have to pay more interest, and you have to your capital would be a little bit less. The reason is, if after let's say certain time, so as I told you, bank will be in major risk in this case. After certain time, let's say if I have no income, or let's say I become a defaulter, or let's say I become a bankrupt, I declare I don't have any money, I have no job, I have no income, no business, nothing. So I declare myself, let's say I'm a bankrupt. Now what will happen to this bank? So the reason is the majority, because bank income is what? Bank income is only about this interest part, and that's what they are pulling the majority of your interest. You can see the percentage of interest, how much you are paying on that amortization table, what I said, how much percentage of principal it is going, right? So out of 1 lakh, whether it is 10%, 5%, 2%, 50%, whatever it is, it will be given as per your year. You can see the year, you can see the principal, you can see the interest. Out of the principal, how much percentage it is going, out of that interest, how much percentage it is going. This is the amortization table. I hope you by that time you have searched your statement and you are just following your statement, EMI statement I'm talking. And logic also, now you understood what is the logic behind this. Principal will be deducted more in the it will be less in the initial stage, and this interest will be more in the initial stage. Reason for the banking security, because after certain time, if I declare myself as a bankrupt, now again the law says, and it's a very strict law, you have to, even your bone has to pay the principal. Are you getting my point? I'll repeat it once again. As per law says, the bone has to pay, the person has to pay the capital. That means initially what is happening, so again you can go through your amortization table, your EMI statement. So I am paying, let's say 5%, 2%, whatever, very nominal amount of my capital. And let's say my loan tenure, it will be, let's say for 5 years, 10 years, whatever. I'm just giving an example. So initial 5 years, let's say I'm paying, let's say 30% of this principal, and let's say 70% of this interest. Now remaining 5 years, I'm going to pay, the interest part is 30% and the principal part is 70%. And imagine, let's say after 5 years, 6 years, or let's say second half of this tenure, I become a defaulter. So as I told you, the law says you have to pay the capital. Now why I told you this designed in such a way, because it is a banking policy and it is just recover the banking security. That means by that time bank has almost recovered the interest part. So bank is already in the profit stage. Whatever they have given, 1 lakh, if let's say they have given, they have received even more than 1 lakh by this time, because of interest, because bank income is only on the interest. Now even though if you become a defaulter, if you become a bankrupt, then what will happen, as law says, so they will bind you on the law. And even though if you go to any settlement, any court case, anything, if you are trying to take any legal help, you have to somehow pay the principal. There is no even like leniency on the same. So what exactly totally, if you understood this moratorium table or amortization table, so what is your understanding? So principal plus interest, and together if I pay, even though initial days 30% of this principal and 70% of this interest, even second of tenure if I pay, let's say 30% of interest and 70% of the principal, that net to net the bank will be under profit. Their security is more, they are going to get their money back, right? So I hope this is a very important thing. I Most of the people, we are bound to pay even a lot of EMIs, lot of things, but I don't know how many of you follow this amortization table. You can go and look at this, how the deduction is happening. This is because of our knowledge. This is again because of our savings. This is again because of our investment, because of kind of savings it is going for my EMI. Probably I have taken due to some XYZ reason, but I need to know, and based on that one I need to also educate myself. So this is actually the amortization table, this is actually the EMI, where I'm paying principal this, where I'm paying interest this, right? So that's it from my end. And as I told always and every time, I just say the same thing. This is all about my experience, whatever even I have gathered, even my last 16-17 years, even all my financial knowledge, right? So it is going to help you, it is going to give you some knowledge, it is going to help you to fundamentally to save your money, to make you more savings, and so that you can improve your investment part, and definitely you can lead a very happy life, and you no need to even go for more and more EMI trap. You have no need to go even more and more even kind of borrowing money. So you have your own money, you have your own life, you enjoy it, right? So that's it from my end. Have a great time, and see you again.